If you want to have a better performance than the crowd, you must from the crowd. This is a quote from John Templeton. Working with traders across different markets, trading styles, routines. How do you normally respond when you feel
Opening
intense
in 30
emotions?
seconds.
This week,
Go.
we'll talk about the best
Equal
way of
high.
handling intense
Equal
emotions
price.
while trading when they show up. I see traders struggling with managing emotions all the time. And they have kind of overcame already the awareness problem. They are aware of when they
This is
show up, but the problem is the way
price
they
Nigeria
manage them.
the lower half.
It's really
That's
worthless to be
coming all the way up.
aware of when the intense emotion, when the emotion intensifies, if you then have a poor process to handle the emotion itself. We all know that it's very important to understand the why behind your behaviors. In life and in trading, you want to understand why you are reacting that way, why you are entering the self-blame mode, why you are not accountable for your mistakes. The why is important.
Take the lows
When it
first.
comes to the
To
short
match
term
our
of
target
dealing
and
with emotions, it can be very
see what price
toxic.
does at 50%
Because
of
this why, if you ask yourself, okay, why am I frustrated? Why am I feeling
but I
so
don't want to sell
guilty about this
because
loss or this mistake? It creates a second layer of frustration. And to this second layer of emotion, we call it meta emotions. And what are these meta emotions? Meta emotions are emotions that arise in response to one's perception of the emotion. So let's call the first emotion the primary emotion. You're trading, you had a loss, you feel frustrated. This is the first emotion. Now, your perception about that frustration is the secondary emotion, which we call meta emotions. Let's say the trader starts to feel, he feels the frustration, and then he starts to feel disappointed and guilty about that frustration. And what this meta emotion does is creating a second layer of interference that doesn't allow you to fully process and accept the primary emotion. And it happens just the same in our daily lives. We might feel sad, and this is an undesired feeling. We don't want to feel sad in that moment, and this starts to create frustration of feeling sad. And this is very typical because starts to dig deeper into the past and trying to understand the logic behind that emotion. Thing is, sometimes our emotions don't have any logic to support them. So what this why does is creating interference. And the two most common responses coming from these meta emotions is number one, it aggravates the emotional response and it just gets you faster to the mistake, so intensifies your emotions faster. Or you, if this is your coping mechanism, all you do is accumulating all that intensity, all that discomfort inside of you, you don't let it go through your body, it stays stuck. But there is a third choice. You can redirect your focus from why, asking why you're feeling that, to how. And this is a game changer because how brings you back to the present moment, while when you ask why, it takes you to the past, your past experiences, trying to find logic. And now that you gave your brain the task to understand why you're feeling it, you really want to find it, because if you don't, then this second layer, this meta emotion, gonna show up. So instead of asking yourself why, when it comes to dealing with short-term emotions, try to ask yourself how. How are you experiencing that emotion? Where is the tension in your body? How is your mind? Take this observer's perspective, get curious about the experience of the emotion, and you will see that you're actually detaching from the emotion itself, because it's like you are observing yourself and observing the experience like it's a movie. So this doesn't mean you merge with the emotion and let it guide you. All it means is that you let it pass through your body instead of clinging to it, and your emotion can, you can be triggered, but you can also let go of it, and that's a much more refreshing approach. However, I want to let clear here that the why is useful. Understanding the why you behave that way is useful. It's just not useful to handle short-term emotions. The how is much better in these terms. When it comes to the long term, obviously you want to understand the why. You want to enter introspection mode, but this is like your longer term plan, your bigger picture plan, because when it comes to isolately and momentaneously handle emotions, always switch from why to how. So the next time you feel yourself getting pissed or you feel your emotions intensify, instead of trying to search for the reason why you're feeling that way, which is it only serves really to feed up your ego, switch to a how approach. How are you feeling? How your body is feeling? And you will see that your response to trading mistakes and everything in the market will change. Peaceful trading, Sarah.
Now let's see. Let's now prefer if it comes to the 50% first, then you just want to take a step if you just want
Welcome to another Thursday Traders
to
Tip.
first.
And this week we'll be discussing the messages you send to your brain, which is related to the topic of self confidence in trading. And part of today's post is taken from the long form post, Becoming a Trader with Unshakable Self Confidence. So let's get into it. Imagine if your brain were a separate entity from you, someone living inside of you, observing your thoughts, your actions, your self talk. How would it view you? Your brain has the power to unlock your greatest full potential. But if you feed it with the wrong thoughts, actions, and self talk, it also has the power to destroy you. And unfortunately, a lot of people out there are completely unaware of these dynamics, so they are living a life that doesn't support their goals. And these are mostly the victim minded people. And you'll notice them around you because their energy is contagious. They say things like, oh, I don't have time for this. Oh, the market is rigged against me, manipulation, whatever, whatever. And they say things like, the system is screwing me up. I cannot go to the gym because I don't have time. I'm trying uh, to grow my abs, but it just doesn't work. I don't know what else to do. And they complain, complain, and complain. So if you're not aware, if you have these people around you, if you pay a little bit attention to what they say to you or what they say in general, you'll notice right away who these people are. So the behaviors you have, the self-talk you have, and even the thoughts and the other talk that you put out, these will dictate the way your brain sees you. So take a moment. If you want, you can even pause this video to answer the following questions. How have you been programming your brain? What does your brain believes and thinks about you? Take a moment to reflect on the behaviors that you've been having, actions, the activities, skills, or things you spend most time with, your self talk, and also the sentences that you most repeat to others. And ask yourself, how do your brain sees you? Now, the following question is, if you would encounter someone with the same patterns of talk and behaviors as you do, would this person inspire you? Would you see them as the person you aspire to be? And take a little bit more time to answer. Now, with the insights you've gained from your answers, grab onto this awareness and just don't let it pass by. Seeing your brain as a separate, unbiased entity helps you kind of align your patterns of talk and your behaviors with your goals, with the person you want to become. I see so many people who lack self confidence and they let their boundaries be walked over by other people. They're constantly in a pursuit of meeting others' needs except their own. This doesn't mean they don't have their goals, desires, or priorities. It just means they repress them over others'
Basically, you can
acceptance.
close
If
the
you are
loop
constantly worried
between your
about getting
time
that
and your
side
goal.
eye or that bidding comment, you will let yourself fade in the background and let others dictate what's the
I think
next
this
step
is
to follow.
very close to
So you're basically not the driver of
the
your ship. And this just keeps feeding the beast of lack of self confidence and lack of self belief. And before you know it, this behavior had become like second nature. You are the dedicated worker who can't say no to an extra hour of work or an extra project, even when your schedule is overflowing. You are the family member who always tries to make it right for everyone and solve the conflicts in the family in exchange for your peace of mind. And you are the people pleaser, always prioritizing others' needs instead of your own. And in this crazy quest and pursuit to making others feel good, you still beat yourself up for not having gone to the gym or not spend times with your kids, your true priorities. And maybe you started trading as a passion, and not having to deal with others' BS made it even more appealing. There's no need to play the people's pleasing game or just handle with others or a group, it's just you and the market. But here's the truth: your lack of assertiveness and your lack of confidence, for more that you try to avoid interactions with others, it ends up revealing in your trading. The market becomes a reflection of the very interactions you were hoping to avoid, and the place you thought it would work as an escape for you is the place where your lack of self belief and self confidence are most apparent. So, if you are ready to align your environment and your life, behaviors, self talk, and thoughts with the person you want to become, a person who is capable of achieving goals, then embrace this awareness, the awareness of the answers you've answered before, and tweak things in your life. Because if you're not living in accordance to your values, what are you truly representing? It might seem that you have no options, but you know what's not an option? Not living up to your full potential and passing a whole life and regretting of
you
things you
get
didn't do.
close.
Decide to take action now.
Just
You
go
only live
with it.
once, so make it count. Peaceful trading, Sarah.
At the
If
moment,
you
there's
took
nothing.
value of this post, you can click in the link below to become a paid subscriber and become aware of your blind spots, of yourself
See this
as a trader,
before
as a person, become a better trader, and
I
achieve more trading results.
or the upper quadrant of the new week opening gap slash new day opening gap actually. Um, if you usually get to 50% by 10 o'clock. So
Welcome, traders, to the Thursday Traders Tip.
first thing,
And this week we'll be
trade
talking about the
if you
two
really get
crucial technical skills that you need
start
to
rejecting
perform in the
then
market. So
look
let's get right into
for
it, and let me tell you what these two skills are. The first one, although it seems obvious, is getting to know what are the favorable conditions to your edge, to your strategy. And the second one, conversely, is getting to know what are the unfavorable conditions to your edge. So let's get into a little bit more detail to each one of them so you can get ready to perform the best as you can in the market. So let's start with knowing the favorable conditions to your edge. And this goes beyond you might be thinking of, okay, I have my strategy, I know my confluences, I know what I need to look for to enter a setup, so I know what are the favorable conditions to my edge. But this goes above and beyond that. It's not only about knowing what are your confluences, but as you gain experience over time, you become a master of understanding what are the favorable
I had
market
the also
conditions
figured
and
down
also what are the most
from
favorable setups
the
that give you better odds of winning and a better performance. So here we're talking about market conditions, market scenarios, but also those A plus setups. It's normal that in the beginning you are not able to distinguish what it's an A plus setup and a B setup. They're all quite the same because you don't have the experience to have a say on what's best and what not. But as you gain experience, you start to notice these special characteristics that give you better odds of success, and then you start to track them, gain statistics about a particular type of setups versus the other, and you understand and realize that your A plus setups, reuniting those characteristics, actually give you better odds of success. And so you're capable of perhaps sizing a bit bigger in those setups, or when those market conditions show up, you are more comfortable and more confident just pressing harder on those setups. And because you're more confident pulling the trigger in those setups, because you feel more confident about them, and you are capable perhaps of sizing bigger, you're also capable of committing to that size from entry to target. So you're more comfortable managing the trade. Now, when it comes to the other skill, which is about knowing the unfavorable conditions for your
I'll
hedge, this is
this law
very important.
very soon.
Because the truth is that you might be very good at trading and making money when the favorable conditions to your ad show up, but then if you're not able to sit on the sidelines when it's not your turn, quote unquote, when it's not your time to get
This
into
is
the
a close
market,
enough
you'll end up giving all the money that you made
to
to the
one minute
market.
time frame.
I used to say that the
That's the
quality of your
trade.
trading performance is as good as your ability to sit on the sidelines. And traders often overfocus on the first skill and they even think, okay, I just need to know what are the favorable conditions to my edge, and then all the other ones are not favorable. But it's not quite this way, especially for those traders that have
So
this
continue
urge
from
to
one
have
price to close below this.
productivity, work hard mindset, and when
This is
they look at the market fluctuations, it's in of itself a trigger to let them enter the market and take
after
trades on
running
their
out these
strategy.
laws. It's a
So
lot of
these
highs
are
here.
the type of traders,
Waiting
the
for
bullseye
first
traders that
to
really
the
need
same
a plan to when
close above
not to
this.
trade, so they
Keep the
can
highs.
have more clarity when they need to sit on the sidelines and exercise patience. And this is not an easy task. It's something that you gain with experience. Just like you get to understand what are the favorable conditions, step by step you start to understand what are the unfavorable ones, and they can be related to the higher time frame. Let's say if the higher time frame, the daily, the 1 hour, whatever you use, is consolidating or price is acting
It's the
weird,
last day of the
this is
month.
like
So
an indication for you to sit on the sidelines because it's a weird price action. Or when
what
the
you get,
volatility is too high,
so
price is acting weird, like there's a lot of wicks and the bodies of the candles are smaller, for instance, or when the volume is very low. Like these are conditions that perhaps you're not so used to trading. And many times what happens is that traders insist in playing their strategy in these conditions. And then they end up giving the profits back to the market. I'm sure it already happened to you. And it's frustrating because you're capable of making that money. You had a successful week or even a successful month, and then market conditions change, and you have this urge to keep on playing, to keep on making money, to maintain performance and not fall down to where you were. So you want to sustain, and you end up forcing your edge and strategy in a certain scenario that it's not optimal.
uh,
But this is not the way to go, is it? You might be curious about the ability of your edge to perform in different market
just have some
conditions, but the way to do it is not forcing it the first time you see it. So if you're not used to the conditions that you're seeing at the moment, all you try
bottom
is
out of
trading
this
on that
fair
day,
value gap
and then when the next
and
daylight
continue
price
trading
shows
lower
up
for the
and the
day.
same market conditions shows up,
Close
you
above
want to
this.
record this information. And
Go
once
back
you
to the market.
have a lot of scenarios
At the moment,
with these conditions, you kind of
it's
want
looking
to study them
to
so
go
you
away
can
for the
gain more
close of this
confidence about if it's actually worth to play your
see if
edge
it
and
takes
to take trades on those days. So the
closes
biggest
above them.
takeaway from
You look for
today is
price.
for you not only to get to know the favorable conditions of your edge,
You can
but
center
also
right
get to
there.
know the unfavorable conditions so you can draw your plan to when not to trade. And with this plan in place, you'll notice that it's much easier for you to sit on the sidelines when it's not meant for you to engage with the market, and that will ease your performance and make those very good weeks stand out. Peaceful trading, Sarah. If you want to get access to more of my content,
You
you can
take
click the
questions
link
upon
below to
the
become a paid subscriber and become more aware of your blind spots,
or
become a
reject
better
them
trader,
and feed them.
and
So
reach new highs of trading performance.
that's what you're looking for the buys. If you get that, if you get sales, you have this level to hit. So that's about
Welcome to another Thursday Traders Tip, and this
what
week
we
we
getting
will be
ourselves
discussing a
around this.
peculiar topic: loneliness in trading. At first, when you start having feelings of loneliness in your trading journey, it might not
That's
seem like a big deal, so you brush it off. But as time goes by, you accumulate emotion, you get more and more lonely, and it kind of becomes a big deal. You would be surprised by the number of traders that I cross ways with or work with that confess to me that they are not living up to their full potential. Something needs to change and that they feel lonely. And these days, people tend to isolate themselves a lot and just work on their goals independently, over focus on the professional life, and think for themselves, I don't have time for my social life. I don't care about other people. I'm just doing my own thing, living my own life. But that's not really the way to go. We are social beings, we need interaction, and this mindset actually creates a lot of tension and stress in one's life. And feeling lonely has a tremendous impact on your physical and psychological well being. For instance, loneliness is directly tied to the Alzheimer's disease, which is not very conducive to your trading. So there's a moment in your trading career that if you really want to stand out and become better, you have to look beyond the charts. You have to look at all the other facets and areas of your life and try to improve each one of them for the sake of sustaining peak trading performance. And so, getting a little bit of a dive deep into this topic, there are really two ways this loneliness, or two moments this loneliness manifests the most in trading. And the first one is in tough times. When you experience a drawdown, when you finish a trading day that was draining and it was a losing day, so it's emotionally tiring, you need some emotional support. And if you don't have nobody, or at least nobody that truly understands you, because if you talk to your family and you tell them that you missed a trade because the MACD
Not all.
divergence seemed one thing and then you missed the other, and you were distracted, they will not get it. So sometimes you need someone on the other side that truly gets you and is inside of the field that you can talk feel more stable.
This
But
can't be
if you
here.
don't have nobody, and especially in these tough
Below,
times,
below.
it's really complicated to not repress the emotion. And many times this is the coping mechanism that loneliness or that emotion or that pain and stress of the trading day, and it just keeps on accumulating. And then the second one, you have a stand at profits, being here, working so hard, proud of what you've been achieving, and you don't have a person to share that with. And that's sad. That's when you realize that
Let's
perhaps
go
you
real
need to. And these
9:32.
are the moments you start questioning how you can fulfill other emotional needs. Okay, you've been dedicating a lot of your energy and focus to trading, but now I want to kind of is that you got in this for and your money. And with money, you can as
So
well
we're
have
just
some
into
more
now.
flexibility to travel and to do the very things you like. But it's important to not forget that you are in this for physical freedom, but also for mental freedom. And feeling stressed and lonely
Um,
during your trading journey is not mental freedom. So if your current environment is not motivating you, it's making you feel lonely and you feel there's something you need to fix, do not ignore it. You would be surprised how your quality of life would improve with just some effort here and there to tweak your environment around, even if you feel lethargic to start with it. Witnessing people stuck in undesirable circumstances for too long is just disheartening. So you're not too old to start a new life, start new relationships, new hobbies, to have more fun. You are never too set in your ways to benefit from a coach who can help you get your shit together, get your life in a better path. And
but
you're
this Eco
certainly
has,
not too
I'm
antisocial to meet new
like,
people who inspire you
so Eco
and
has, I'm
uplift
in
you.
there now. Like,
So if
so
you
we find out the
recognize
stuff.
that your life off the charts
That one is
is not allowing
a
you to deliver your full potential, then deliberately choose to make some changes. Go above and beyond to live the best life you can, and I promise you it will reflect on the charts and in your trading results. Peaceful trading, Sarah. I see traders all the time resisting journaling, and sometimes they are 1 2 years into their trading journey, and they still don't have a journal because they cannot find consistency with any journal. They already tried a lot of them, and they cannot settle with any model. Or those traders
funny.
who
But it's
never
stuff.
had a journal, don't believe in journaling, and so for this reason, today I would like to talk about the 3 limiting beliefs, the most common ones I see when it comes to journaling, and then in the end, the the best practice you can have for your journaling. So the first limiting belief is that of the traders who say that I do well without a journal, I can be profitable, and I can memorize everything. I don't need to review my trades. I can learn from my mistakes right away, so I don't need a journal. But the question here is not if you can or not be profitable with a trading journal. In fact, there are traders who can temporarily, though, be profitable some months without one. But the question is another one. Can you sustain your full potential? Or can you give your full potential without a trading journal? And to answer this, you can look at other top performers and see what they're doing. So journaling is, I would say, the biggest slice of preparation in
So
trading.
9:30
There's
run out,
physical
Asia go.
preparation, mental preparation,
That's
doing
key.
back tests. You have a series of things to prepare yourself. Recovery is also part of preparation, but journaling is the biggest one. And if you don't prepare yourself, if you skip that step of the process, how does that reflect in your trading then? Cristiano Ronaldo, for example, is actually Portuguese, and that's why I'm giving you his example. Is the best. I mean, you could argue this the best football player in the world. Is widely recognized. Probably you know him, and he has a legendary preparation routine. He invests in all types of equipment, in gym equipment, in recovery equipment, which is part of his preparation routine, in GPS monitoring. He has biometric sensors to track the speed, to track the heart
Well,
rate,
today, like this.
and other key metrics.
What?
And so his preparation is a really important part of the execution to then deliver his best. And there's tons of examples out there. We have LeBron James. So top athletes recognize that preparation is 90% of the actual performance skill, and that's why they invest so much in it. And actually, this is the exact reason why they become the best of the best, because they prepared better than the others, than their competitors, and that's why became so good in their fields. And so if you want to become somewhat of a top performer, right, which should be your priority. If you're going into trading, you should go all in. If becoming a top performer is your priority, then why not focusing in preparation? Because yes, you can do well without a journal. In those times that you're doing well, you're not so worried about your performance. Things are going well, but when you go into a drop, when you get into tough times in the market, what are you gonna grab onto? What are you gonna analyze? What are you gonna review? From where are you gonna get the confidence back? There is no place to go because you don't have a trading journal. And this is what top performers do. When they have tough periods, because all of them have, they raise their self-confidence from the past wins,
Speak
from the
for her.
past performance they had in the past. So they review tapes in case of athletes. They have other techniques. In case of trading, you got to go to your past winners. You got to analyze market conditions. Did something changed? Did my performance changed without me being aware of it? So without something to reflect upon, you are kind of lost. You don't have the basis of the pyramid, something that we've talked about in a past post. The basis of the pyramid, it's the groundwork that sustains then the second slice, the execution, and then we have the top of the pyramid, which is the P&L, a mere consequence of groundwork and execution. So if there is no base of the pyramid, when you fall, the fall is bigger. The second limiting belief is the one of traders that say, I've tried everything, I've tried every trading journal model, and nothing works with me. I cannot just find consistency with one. And for the traders who say this, I do believe there are two crucial motivators for this. There's, on one side, procrastination, and on the other side, disbelief and confusion. So, starting with the procrastination, this is typical of perfectionist traders who think that because they don't have the best routine or they are unsure about what is the best possible trading journal they have this doubt about it. And every time they go and fill it out, they have this this aversion of imperfection because they are so doubtful if they are doing the right way. They end up not filling it out because the commitment is too weak, and they just stop with it eventually. And then we have the disbelief. And this disbelief is about, once again, it brings us back to not being sure if you're doing it the right
Face to
way.
face.
And I see this with a lot of traders, is because they are unsure of the right way of doing it, they end up just simply not doing it to avoid the feelings that come with imperfection, right? Just like the procrastinator.
Even
And so, because there's this confusion
need
about
more
if
information on
the
this
trading
one.
journal is the right one for them, when they have a bad trading day, like a loss they are not very proud about, instead of journaling it, together with the confusion, together with the unsureness about the journal, they fall into the same pattern of not journaling. And then it's a cycle of wanting to journal but not finding consistency with it, and then searching for the right way that they end up never finding because there is no right way. And yeah, the advice that I have here for you is there is no right way. There is the basics. So you should start with the basics of your journaling, right? And as long as you have the trade there that you can look at
Only
it
this
and
shows
you
all you
can
got.
analyze, it's enough. So start with the basics, because having a simple journal is way better than having no journal. It's just like going to the gym. It's better to have a poor session in the gym than no gym at all, right? So go with the basics. Try to gain some secureness of your journaling skills, but don't give up of it. And now, the third and last limiting belief that I see the most is traders saying that journaling is only for beginners. And there's a point in your trading career that you no longer need a journal. Ironically, these are the same traders who are beginners and think they are advanced. Like 2-3 years into trading, this might not be a beginner. Even if you are 5 years into trading, you might still be a beginner, because what counts is not only the time of experience, but it's how you experience that experience, if this makes sense. How are
There's one
you
minute detail.
with your
I just got
processes?
past the
And I'm telling you, there are sometimes traders who are training for 1.5 years, 2 years, and they already have the processes in place. So their experience weights more than the one of a trader who
rejection.
is completely lost and have no processes in place. It's not always about the time. And so I think there's something to clarify here when it comes to this third limiting belief that journaling is only for beginners, which is there are two types of journals, right? There is the journal where you log in your trades, you log in the risk management, the date of the trade, all those boring parameters, because that's boring stuff. Nobody likes to be there busy with something you already made, which the trade is made, and you're just repeating it. But then there's a second journal, which I think some traders lack awareness of, which is the reflective journal. You want to look back to the trade you've put in your journal, and you want to think about it as, okay, what did I do wrong? What did I did right? And how can I improve what I did wrong? And how can I reinforce what I did right? And then transforming this reflection into solid plans of action that you then execute in your live sessions. And so, yes, you need both journals. You need the boring journal for the sake of then being able to reflect on your trades. And sometimes traders are too unsure about the second journal, the reflective one. And this is exactly what I do with the traders I coach. We build your groundwork. We'll build you a solid routine that resonates with you. Then you can look at it and you can say, all right, I'm going to be able to keep consistency with this routine 1 year from now. And then without pressure, you start to fill out the journal day in and day out. And once you can prove yourself that you're very good at that journaling process, like 2 months of consistent journaling, then you can add some things. And then you normally start to have a better notion of what you need to add, and
You
what
mentioned
details you must add to your journal to
this.
make it more complete. And this is a confidence boost, because once you know and you're sure that the way you're doing your journaling, it's not the right way, but you have the accountability and you have the certainty that you're doing it the right way because it is your way, and for the sake of improvement and no perfection, it's a different execution. So If you identify yourself with one or more of these limiting beliefs that I referred, we have the first one, which is I do well without a journal, I can memorize everything. Then we have the second one that I already tried every
Just
model
that
of a
part of
journal and
the
nothing works for me. I cannot keep consistency with it. And then we have the third one, which is journaling is only for beginners. If you see yourself in these beliefs, then understand that these are no excuses for you to not have a journal. And until you don't have one, you will never be able to deliver your full potential. Deep down, you know that you're not giving your best. You cannot memorize everything. Our memory is limitative, so journal those traits, go through the reflective process, and improve your trading. Peaceful trading, Sarah.
which one of those?
Traders exhibit the most distorted coping mechanisms to deal with uncomfortable emotions in trading. They try to fix the emotion by avoiding a
This is gonna be
loss
the
or
second
by
I've been losing like
avoiding
this.
inaction in the market. They
I really
try
want
to
to see
distract themselves by browsing on social media or interacting with friends just to run away from the feeling
but
of the discomfort, the feeling of guilt, or whatever it might be that they're experiencing.
when I get to one
They enter
about
denial mode
exactly.
about the emotion. They seek certainty by overanalyzing or over preparing to get this feeling of control and to kind of trying to fix the emotion from insecurity and uncertainty to certainty and safetyness. They blame themselves or they enter fault defame mode, something we've talked about in the last week's Thursday Trader's Tip. You can revisit it in the Substack archives. Or they downplay on the emotions and they start to rationalize what they feel by telling it's not of a big
Let's get to
deal,
50%.
which then leads them to accumulate the emotion. Thing is, when you perceive discomfort as something wrong, you will make everything to make it right. And this is especially true for problem solvers or fixers, like people who were extremely effective in their past careers, past jobs, and they ascended to managers. They had better control. So they want to try and go and do the same with the market. When they lose the grip, when they feel this lack of control, it causes an insane amount of discomfort that they try to run away from. And trying to solve this discomfort with, denying it or by trying to repeat some affirmations, it's just toxic positivism. And needless to say, the only thing this does is throwing more wood in the fire. There are better ways to deal with discomfort in trading. And until you try to fix it or see it as something that needs a fix, you will not trade detachedly. And so, what needs fixed? It's not the discomfort in itself, but you need to go through a mindset shift about experiencing these uncomfortable emotions, about what it is discomfort in trading. And the first thing you gotta acknowledge is that top traders feel discomfort
I know.
and that it's very normal to feel this while you're trading.
Alright.
It's that healthy nervousness that you feel, right? Something we've also covered 2 weeks ago. Nervousness is a component for the flow state. Another very important thing is to realize that the pleasant emotions, we're talking about joy, love, happiness, excitement, they are as needed as the unpleasant emotions like the anger, frustration, sadness, and the whole wheel of emotions, or spectrum of emotions, let's call it this way, is needed to survive. It's
So I'm
only our
using the
emotional brain that associates
underclock
certain
theory.
emotions with pleasure and others with pain. And this is our instinctive mind, our ancestor mind talking. But when it comes to a more
Someone
rational
price closing
approach,
above this candle.
we must acknowledge that without
Yeah.
the unpleasant emotions, how the hell would we know how happiness feels like? We will not be able to distinguish. So there's this duality that is needed to experience life. And when you try to avoid some parts of yourself, which is to say, certain emotions that you have, you create an
We have
inner
one more minute in the
conflict
macro,
in the
so
brain, and
let's
it
get
leads
on the
to
point.
accumulative
Please.
emotion. Instead of letting it pass through your body, you're clinging to it. And sooner or later, most likely in your trading, it will
How can we get
erupt
here?
and you will have this outburst that you don't know where it's coming from.
Open up.
So the first step here, and the most crucial one, is understanding what is your normal coping mechanism. What is the one that you normally use to deal with discomfort in trading? And again, not only in trading, but this goes back to your off charts life. The way to be self aware and to understand how you normally deal with discomfort is thinking about situations that normally trigger uncomfortable emotions and see how you deal with it. The coping mechanism that I see most often is traders who avoid conflict. So this can be in their work, in difficult conversations, tough moments with a family or with friends. Instead of dealing with a situation head on, they just run away and they isolate themselves. And the way this pans out in trading is pretty much the same. Whenever they have this uncomfort, instead of dealing with a loss, instead of objectively studying the trade to see the lesson they might take from it, they enter isolation mode. They don't want to look at the loss, they avoid confrontation, and this is pretty much their way of coping with discomfort. And so this reveals a lot of your tendencies. The
Right now,
way you deal
Brian,
with
you have a
situations
lot
of charts
of PC objects.
reveals a lot about the
Chances
way you deal with tough situations in the market.
for
So,
going
my
to
challenge to you,
branch.
what I want you to do is the next time you feel this emotional discomfort in trading, triggered by a loss, by
She is a
a
Brian.
mistrade, by unclear price action or heightened volatility, instead of using your normal autopilot mode, your outdated coping mechanism, try to switch modes and use your healthier coping mechanism that you planned for up front, which is acknowledge this discomfort. It's happening to you. Think about it as necessary for you to sustain peak performance and have a very good session. And then use it
This
as a
is
means to stimulate high alertness and high self awareness. Peaceful trading, Sarah. Hello, traders. Welcome to another edition of the Thursday Traders Tip. And this week we'll be talking about silencing your mind and silencing the urge to act in the market, which is such a problematic tendency a lot of the traders I work with have that leads them to all sorts of trading mistakes. So, the impulsive trader often has an opinion about everything that happens in the market, or at least they have one. And working with traders for this long shows me that a pattern is very present and common, which is the urge to act in the market right at its open. So they might wake up and they already feel this urge, this anxiety, pressure to act in the market. And as soon as the market opens, they irrationally and impulsively take a trade. And this can be an early entry, a trade that's off strategy completely, or just a stupid mistake. And what happens is that later on the session, the beautiful setup they've been waiting for, like a week, or the setup they've been expecting to take or predict the move for the day, it appears later in the session and they miss it. So the problem here is not about missing the trade, but looking beyond, looking, okay, what really caused
the
the
biggest entry
mistake,
right
the
now.
missing trade
Massive
was their
effect.
inability to silence their
Right?
mind and just recognizing that they didn't have enough information to formulate an opinion about the market.
What is
So these
that?
traders, they often know what's happening. They know the symptom, which is lack of patience. It's not the problem, but they have no idea why they've been repeating the same thing over and over again. All they know is that as soon as they wake up, they feel this urge kicking in, and as soon as the market opens, they hit the trigger. So they are aware of the problem, but they have no idea what's causing that problem. And that's an underlying belief, the belief that in order to get results, I need to be productive. And this has been working throughout all their lives most of the times. They are business people, they are highly successful people, and this worked for them. So the more they did, the more they control the teams, the better the results. And these ingrained beliefs was something that they transposed to trading, but it doesn't work this way. And so it's not that they don't consciously know this. They know that they need to be patient, but because they have this deeply ingrained belief, there's an inner conflict every time they trade. There's this subconscious active belief that's acting on the background and they might not have an idea of it. And then there's this consciously knowledge that they need to be patient. And in their brains, this creates a lot of resistance that they then use to trade. So the question is, if this is you, how
Just
can
to
you
break
get
it.
out of this
Alright.
default mode of urge for action? And one of the crucial mindset shifts that you need to achieve in order to dismantle this belief is that
Range as well.
you don't need to have an
This
opinion
type of rubbish.
about everything that happens in the market. And this actually gonna hurt you more
Like
often
more
than not.
than 200
So
points.
just like in a conversation, just like talking with a group of friends, some of your friends bring out a topic, let's say a sport that you're not an expert of, or you don't master the sport, you don't know, or you don't know anything about it. You don't have to have an opinion about it. You just need to enter silence mode and just listen to it. So this is exactly what happens in the market. You are there to have opinions about your strategy, not about
Yeah,
all
the
the
first
noise that
market
happen
and
in the
now
market, especially in the first 15 minutes of the market open, when by acting impulsively right away, you lose the advantage of waiting for the market to show its end and have better information, more information that you can use to have a more well-informed decision. So I want to challenge you here and ask you to practice this ability to silence your mind when you don't have an opinion or you don't master a topic. And just like all the skills that you can have in your trading, you can start practicing them off charts. And this is one of them. So one thing you can do is the next time you are in a conversation with a friend or even with a stranger, practice your ability to just
I have
silence your mind.
reacted of 50% of
Shut
them.
down your ego and whatever beliefs you might be trying to impose in the conversation. And conversate,
These things are
but
getting some
truly
type of
listen to
rejection of
what the other
50%
person is telling you
right there.
without trying to, sometimes we are in conversations waiting for our turn to talk, our turn to impose, to control the conversation in our
Let's
favor.
go.
But this time, the next time you have a conversation, just shut it down, silence your mind, and just fully listen from a place of understanding. By becoming a better listener, you'll also become a better observant of others, and more aware of what's surrounding you. As well as when you're trading, you'll become more able to see what the market presents you and then have a better decision. And while in the past you were only absorbing 70% of the information that the market will be giving you, now you absorb 100%, and this gives you the advantage of better decision making. And this way, nothing passes through you because you're actively listening to what the market is telling you, and only then you decide to respond with the best decision you can. Peaceful trading, Sarah.
if I was trading forex, I was gonna stop that.
There are two types of traders when it comes to perceiving trading
I'm
mistakes.
not being
On
like
one side of the spectrum, we have the hyper accountable type,
that.
and on the opposite side of the spectrum, we have the false defame type. And these two type of traders have completely different internal and external responses, behaviors, but the result is the same, which is inability to learn from trading mistakes. This is because in order for you to learn from a trading mistake, you need to first be able to hold a non-judgmental view of your trading, of your
So
mind, and this is something that's practicable
for it,
with mindfulness, with ability to detach from the outside situations and from your mind. So for the hyper accountable trader, it's quite impossible to look at the situation from a non-judgmental view. There's a lot of judgment, a lot of self-blame and self-criticism and guilt. But then for the fault defame mode, they don't even take into account the situation because they have zero responsibility about it. It's like it happened to somebody else when it really happened with them, but it's none of their business. So, getting here a little bit more specific into each type, let's start with the hyper accountable style. And this style needs to remove the internal clutter, the internal interference. This is the self blame we're talking about, the guilt, and the self criticism. And what happens is that the actual perception about the mistake that these traders hold is worse, is a bigger of an obstacle than the mistake itself, which extends the consequences of the mistake when it shouldn't. When you make a mistake, you take your lesson and you move forward. These traders are, it's impossible for them to do this. And the truth is that the market doesn't care about your perception of mistakes. If it happens, it affects your performance somehow, but then you're the one who decides how that mistake gonna influence your further performance. So you're mainly doing it to yourself. So in order to be able to reset yourself after each mistake, there's two main skills this hyper accountable style needs to achieve. And the first one is self-compassion. Self-compassion is pretty much about shutting down the negative, the toxic self-talk. Like, I am stupid, I am dumb, why did I do this mistake? And instead of asking why, in order to have this self-compassionate approach, just ask yourself how. Where are you feeling the discomfort? What part of the body? Where's the tension? And get curious about how you're feeling the, the feelings you're having at the moment. Now, the second skill is acceptance of imperfection. And this is removing the pressure you put on yourself a lot. And to be able to do this, you gotta recognize that mistakes will keep on happening. This is a performance skill, so there's no pattern, there's no end goal, no end result, and you will keep on progressing. And that mistakes actually, what they do is funnel your way to success by excluding other things that don't work for you, or by giving you lessons that you can then build this path. Now, when it comes to the faulty fame style, this is a more curious style, and we tend to think that the hyper accountability is a little bit better than the faulty fame mode because at least they acknowledge the mistakes, but they're actually really in opposite sides of the spectrum, and they are both very, very negative. You know, when it comes to this style, the hyper accountable style actually needs to give some doses of self-blame to this type of trader because they have none. So one thing these traders need to understand is that fault is not the same as responsibility. These are two concepts that it's very easy to confuse them, but we need to distinguish them. So as long as your trading account is yours and it's you who's clicking the buy and the sell button, it's both your fault and your responsibility what you do, right? But then we have those incidents like a power outage or the electricity falls down, and it's not your fault that you couldn't keep up the trade, you couldn't run the trade, and perhaps you had a loss. But from who is the trading account and who cares about the trading account? You, right? So it's your responsibility to deal with that situation further on. So the market couldn't care less. Avoiding responsibility might be your coping mechanism to dealing with trading mistakes and to avoid failure. So if this is the case, then you need to rapidly change your perception about mistakes. And this is exactly what I do with the traders I coach daily. We understand what are the symptoms, and you probably are going through the same. You know what are the symptoms of your trading problems, but we dig deep to work with a cause, which most of the times is an underlying belief that's stored in the subconscious that's making them create this inner conflict while they trade and this resistance. So if you're committed to your trading improvement and you're serious about starting a coaching relationship, you can see if you qualify in the form in the Substack post, and you'll get an answer soon. Peaceful trading, Sarah.
I might wait for 12 o'clock before we do anything else. On this weekly kind of flip. Yeah.
Hello guys, welcome to another edition of the Thursday Traders Tip, and today we'll be talking about the 5 components for the flow state to achieve exceptional trading. performance. So, in whatever performance skills, top performers describe the flow state, entering the zone, as something they gain a lot of clarity, focus, be it trading, practicing a sport, dancing, acting. These are all performance skills and they require performers to achieve this flow state. But what is it really? And the first component of the flow state is nervousness. And many of my clients, they arrive to me precisely because they want to eliminate the stress and the anxiety and this background nervousness in their trading, but little they know that this nervousness will be there and it's normal. And until they accept it, they will keep on struggling with their trading performance because they try to avoid it, they try to fix it, they see it as something wrong that needs to be right, they need to make it right, and it's just a normal thing. And it's actually the first component that we're here describing to the flow state. So, as long as you keep this nervousness below a certain level, they are very beneficial for your trading. But after that level, after that intensity, we don't want it to blow up your performance. So, a very important mindset shift, the first one I would say, is the one that this discomfortability, these uncomfortable emotions, they do not need to be fixed. In fact, they will be there. But we can transform this background nervousness into a high alert state and high awareness. And these, yes, these are skills that you really, really need for exceptional trading performance or any type of performance. So instead of seeing this nervousness or this discomfort as something to avoid, start to engage in a conversation with your mind and question the discomfort, what is asking you to do, and then deliberately take your choice. Make the choice of the path you want to follow. It might not be according to what the discomfort is telling you to do, to avoid that trade or to take those profits too early. But by taking into consideration your emotions, it's a much more self compassionate approach that allows you to trade resistance free of your mind and market environment. The second component of the flow state is time dilation. And I'm sure it already happened to you, not necessarily in trading, but while you were doing something that you were truly passionate about, alone or with a friend, and you felt immersed in that activity, let's say a sport, let's take it, playing tennis, and you were so immersed and energized by it that you overestimate the amount of time that has passed. So what seems 15 minutes that passed by, it was actually 1 hour. And this might happen as well in your trading, as you're trading, especially with short term traders. Let's say they are in the 1 minute watching price fluctuations in a detached way. And they are so passionate about it and about creating a narrative and absorbing market information that they overestimate the time that has passed. So there's this time dilation component to the flow state. The third component is loss of self consciousness. So, what this means is that you're not focused in the past or in the future, you're fully present. So, you kind of lose a sense of self, like it's just you who is there absorbing market information. And so you don't engage in self-evaluation, in judgment of your mind, you don't offer any type of resistance because you just lose the sense of this self-consciousness. The fourth component is hyper-awareness. And this is something you probably already experienced. When you are in the flow state, you're so aware of what's happening in the market, but also in your mind and with your surroundings. So it's like you're aware of everything, and at the same, you are focused in what the market is doing. 1 month ago, I had an interview with Tom Basil, and he was explaining me exactly this. When he was trading, one of the game changers, one of the characteristics of his flow state was this hyper awareness. So he would be trading completely concentrated in the trade and in the charts, but he was aware of his surroundings and what was happening there, who was opening the door over here, so this is another component of the flow state. And then we have finally the fifth component of the flow state, and this is a sense of fulfillment. And this sense of fulfillment is not attached to the results, but to the process of trading. itself. So you really feel connected to the market. You feel in flow, and you feel that there's nothing in between. There's no mind interference, there's no outside interference. You are connected to the market and you are one with your strategy. And because this happens, this brings you a huge sense of joy, a confidence, and a precision to take trades that you don't experience when you have noise around you or inside noise in your mind. Now, I want you to take a look at these 5 components of the flow state. So, nervousness, time dilation, loss of self consciousness, the sense of fulfillment, and the hyper awareness. And think for yourself, what triggers this flow state for you? Because different traders will have different triggers for their exceptional trading performance. So, here we're not talking about results, we're talking about accurate performance according to your strategy. And so, if you already have these trading days where you were fully focused and in the flow and you experienced all these characteristics of the flow state that we've talked about, what happened for you to be able to do that? What's the difference between those days and the days that you perform bad? So we need to really dig deep and understand what are those triggers for you so you can repeat them more often. Because yes, good performance is about improving what's to improve and the mistakes and everything, but it's also a lot about reinforcing what's been working for you and doubling down on the triggers that lead you to exceptional trading performance. Successful trading is not about repeating the triggers of other traders. So it might be that a certain pre-market routine works really well for you, but for other traders, it doesn't work. Or it might be that you read on Twitter that cold showers are amazing, but it just doesn't work for you. Or meditation doesn't work for you before the sessions, but after. So instead of replicating the triggers that lead other traders to good performance, try to understand your triggers, your trader identity. And when you understand them, you don't need any other trader telling you what to do because you're confident that you can draw your own path to success. Peaceful trading, Sarah. To understand exceptional trading performance, we first need to understand what it isn't about. Performing at your best is not about having a winning day, and I think we can all agree with this so far. Quality of execution is not about perfection, it's not about catching top to bottom or bottom to top. It's all about respecting your strategy. Now, you might have some realizations coming from the execution that you want to test out on a series of trades, but that's more of a side project that you want to do apart from your executions to not let affect them until you have solid conclusions about those hypotheses. Now, there are really 2 approaches to achieve quality of performance in the market. And the first one is performing with this resistance to the market information, to your mind's reality, what's happening inside, your emotions, your self-talk, and you offer so much resistance and non-acceptance that you end up your sessions really, really tired. Now, trading with a second approach is totally different than the first one. You're basically trading in surrender mode, resistance free. So you let the market information tell you what you need to do. You let, your mind flow and you don't cling to any type of negative energy or negative emotions. And because you're so focused on the present, you don't let past guilt or past results affect your present decisions nor future expectations. So you're fully focused and immersed in what's happening. Now, this doesn't mean you don't feel emotions while you're trading. You certainly feel that uncomfortable nervousness or a little bit of stress or anxiety, but that's normal. What happens is that you don't cling to them, you don't let them get accumulated in your body. And so when you come for the next day, for the next trading day, you are fully reset to start your day and give your best and fully in control. And although both approaches might end up offering you the same result, which one do you think offers you long-term sustainability? Trading by offering this type of resistance to the market and your emotions works until the emotion accumulated surfaces. And one day, all of a sudden, you're trading and you just explode out of nothing. You make all sorts of trading mistakes, revenge trading, over trading, oversizing, and you don't even know what's happening, what triggered that. Now, all goals come with conditions, or at least they should, because when you don't set conditions for your goals, it means you become an hostage of your goals. And certainly, you're not willing to sacrifice everything. You might not be willing to sacrifice your family, your health, your time with your kids, for example. So there has to be terms and conditions for everything. And the same in trading. What's the worth of making so much money, or at least having that goal, if it's not to trade with quality, if it's not to trade resistance free and in full acceptance mode? Peaceful trading, Sarah. Hello, traders. Today, the topic is the trading matrix or the trading pyramid. And this is a concept that I use with the traders I coach. It's a simple concept that helps you understand what are your priorities in trading. And so, knowing your priorities, you are much more capable to put focus where you should instead of switching everything. And so, let's break it down. This pyramid has three slices. And the first one is the groundwork, which builds the basis of the pyramid. The groundwork is all the preparatory work. This means the backtesting, the database, data collection, analysis of trades, and those insights that sometimes you take from your executions and that you go to your database to test them out and take conclusions from them. Then we have the execution. The execution is your real-time execution of your strategy in the market, and it requires skills of decision making. Okay, and so lastly we have the P&L, which is the top of the pyramid, and this is the euros, the dollars, the yen, whatever you're trading. This is the byproduct of the other two slices that sustain it. So let's break down each one of the three key principles that we take from this pyramid. And so the first key principle is that the groundwork forms the base of the pyramid. All this database, the data collection, the analysis of trades, the biggest amount of confidence and all other emotional skills that you want to have in your executions, they don't come from from a vacuum. They come already from the groundwork. So your executions are nothing more, nothing less than a reflection of how well prepared you are. And so when you get this mindset shift of understanding that the basis of the pyramid is not the execution, but rather the groundwork, you start putting way more effort in the process and in all the routines, habits, mental and emotional skills that you need to become a successful trader. So it's a much more deep approach than just relying on results to tell you about your abilities. It's another type of self-confidence. And so the second key principle we take from this pyramid is that the execution is the bridge between the groundwork and the P&L. And so it's where all the preparatory work gets translated into these tangible results, right? And so when it comes to executions and to your trading in general, really, the only goal should be to make good trading decisions. Money comes as a byproduct. This is why it's so important to focus on the process. Now, there are really two sides of good trading decisions and how to achieve them. And we have with normal conditions and taking all the types of performance activities. It happens the same with all of them. We have normal conditions and we have adverse conditions, and we need both. And let's say for an athlete, the normal conditions would be on the trainings, right? Daily trainings or daily executions for the traders, and then the adverse market conditions, which for the athlete would be the competitions. And what happens many times is that these athletes are not able to hold the same level of performance in trainings and in the adverse conditions, in the competitions, right? Because they have a whole crowd looking at them, and this creates pressure, which is this internal interference. But it actually takes the professional, the performer, to go through these adverse conditions in order to develop his or her emotional regulation skills. And this is when you achieve a different pattern of mastery in the performance skill, because you know that no matter what is the environment around you, you are able to self-regulate and self-control in order to deliver your full potential. So there's no type of interference whatsoever that is in between your full potential and your reality, what you actually make possible. And so the same happens in the markets, right? We not only need to experience those normal market environments and, we are familiar with them, but we need to go through periods that are adverse conditions. These are drawdowns, these are losing streaks, adverse market and emotional conditions. And it's when we go through them that we need to change our perspective about
It's
them.
pretty
These
tough.
are
That's crazy.
opportunities for you to develop this mastery. It's like the market is giving you the barrier in order, it's like a test, in order for you to be able to destroy it and to move forward. So this is really when you know that you achieve mastery
I
as a trader, when you get out of that drawdown, when you survive that losing streak. And then we finally have the third key principle, and that's that trading confidence comes from the groundwork and is transferred to the executions. So many traders think that the base of the pyramid is actually the executions, and that's where they're going to take the most amount of confidence because they get to experience the winners and the losers. And when this happens, they really attach their sense of confidence and sense of self to the results, right? So tunnel vision. But when you go to the sessions, and this is key, already with confidence established from the groundwork, from your big samples, from the big picture, you don't need those results to confirm your abilities. You know that in the long term, your edge gonna favor you, and those results of trading day by trading day are short-term focused. So they really don't matter to the validity of your trade. They are unpredictable. And so when you go to the sessions already with this confidence in place, it gets so much more easy to regulate your emotions. And then there's also confidence coming from the executions, right? But this is more the smaller slice of the cake. So the biggest slice is comes from the groundwork, and the smallest slice comes from the execution. It's where you're able to respond in a different way to an old problematic trigger, for example, or when you're able to, ride your position for longer than you're used to, and you combat your fear or your greed. And so these are all proofs that the decision is in your hands and you don't have to actually react according to your emotions. Nothing gonna happen. You're not gonna die, right? And so this gives you a boost of confidence, of self-confidence, even in your abilities to decide according to your long-term vision. So the message that I want to pass to you today is that executions in itself, they are empty and they are vulnerable to short-term emotions and results. The groundwork must remain the basis of the pyramid, and you must dedicate some of your spare time in your weekends, whatever it is, to feed this base of the pyramid so you really solidify it week after week, so you can start in your Mondays, your trading session, completely reset, zero emotion accumulated, and focused on making good trading decisions. So all of the challenges you're facing in your executions, they can actually be solved by doubling down on the groundwork doses. Peaceful trading, Sarah. Hello, traders, and welcome to another Thursday Traders Tip.
The
In
one
the
that's
past week's
the
webinar, we talked about the 6 forms of patience, and if you want to revisit it, you can find it in the link below somewhere in the Substack post. And this one will be about risk tolerance. So on one side, we have the risk-averse traders who might use 0.5 till 1% exposure on their trades, and they have a tough time enduring losing streaks and losses, And then we have on the other side of the spectrum the more risk seeking traders. And these traders are the ones who don't have any type of problem in pressing when the conditions are favorable to their edge, let's say on their A plus setups. So they understand their edge, they know what are the setups that perhaps give them better statistics, better win rate, and when they show up in the market, they have no hesitation whatsoever, both to take the trade and to go in with a bigger size and perhaps even pyramiding in the duration of the trade if it's going in their favor. So these are two different types of traders, and their trading performances are quite different. So, for example, for the risk averse traders, they are incapable to press harder even if they realize that the A plus setup is there, but they just cannot click the button. They cannot take action. They hesitate, they second guess their confluences whatsoever. And so they have this difficulty um, acting on the reality of their strategy and of the market. Now, when it comes to the risk seeking traders, because they take more risks, they naturally also have better and bigger rewards. So, normally it's like this. Now, an important mindset shift to achieve here is the one that even if you don't take any risk, even if you remain in your comfort zone forever, this still has a risk involved, right? The risk of not growing, not growing your account, not going beyond your comfort level, and it has the risk of regret, right? So, in essence, everything we choose has some type of risk associated. We are the ones that have to measure the risks, and we tend to see stepping outside of our comfort zones as a risk, but there's also risk involved in remaining in them. So, this understanding comes from realizing what are both risks and which one is the one we actually want to take, and that aligns with our long term vision. So let's talk about the three factors that affect risk tolerance in a hope that you can understand more about yourself and then adapt things to become more of the trader you want to be. And so the first factor affecting risk tolerance is personality. And for this, I would like to start with a very important distinction, which is between risk type and risk behavior. Okay, risk is not all the same. So we have the risk type, which is developed more or less until our mid 20s, and it's kind of established throughout our entire lives. And this is more defined for our personality. But then on the other side of the spectrum, we have risk behavior. And this is something you can adapt. This is where your hopes to become more of a risk taker are, because with risk behavior, you can adapt to different market conditions, different situations. You don't experience the same risk tolerance with all life and market situations. Let's say you might be very bold and be easy on taking risks when it comes to public speaking, talking with strangers, socializing, and you're very communicative. But when it comes to, for example, radical sports, you're a little bit more risk averse. Or when it comes to financial decisions, you're more risk averse. So it really depends of the situation. And the same in the market. Let's say when you have daily market conditions that you're comfortable trading, you will be normally a little bit more risk seeking rather than having a consolidation on the daily time frame. You might choose to take trades still, but you might go for less exposure per trade. So, to really understand the difference between risk type and behavior, imagine a boat floating in the ocean. And let's say this boat is attached to an anchor to the sand. The risk type would be this anchor. It sways a little bit in the sand, but not much. It's really established. This would be defined by your personality. But then, when it comes to the risk behavior, this would be the boat. So it floats around to a certain extent, defined by the anchor, right? But you can kind of steer the boat into your advantage depending on the situation. So this is the idea. In the market, there are situations that you're gonna want to be more risk averse, naturally. For example, going through a drawdown, tough market conditions. A good idea would be to cut your risk in half until you recover the loss back. And there are other situations where you naturally want to be more risk seeking. Let's say with your A plus setups, with favorable market conditions. For some traders, this can be high volatility, earnings days, who knows? Each trader has their own favorable conditions for their edge. The second factor affecting risk tolerance is experience. And this is an obvious one, right? The more experience we have in one task, hobby, activity, the more habituation we create, and the more we integrate that activity in our comfort zones. So it's very normal that, for example, rock climbing is seen as a high risk for some people, but then for other people who don't practice the sport and never did, it looks like on the outside that rock climbers are crazy and they are super risk seeking. But in reality, the rock climber, all they are doing is mitigating the risks by their skill set, by gaining experience, by throughout preparation before climbing that rock. So this skill set and their preparation allows them to better manage the risks. So it's not they are uh, really risk seeking. The difference is that they have integrated that activity in their comfort zones and they are more comfortable with with the activity and taking risks and pushing themselves. And on the other side, might be that because it's a passion, they really love rock climbing, it also becomes easier to be inclined to taking risks in something you love. It takes less energy and less metabolic energy. For example, you're a trader and you might have people in your family who think that you are a crazy risk seeking person. You are completely crazy because you're gambling. But what they don't really know is the ability to manage risks that trading entails. And so on the outside, they perceive it as a very risk seeking activity when in fact, all we are doing is managing the risks effectively and mitigating them. And the more experience we gain, the more comfortable we become to taking those risks. So, for example, sizing more on a trade, or starting to learn a new market, or holding the trades for longer, or pyramiding in the trades. Now we have the third factor affecting risk tolerance, and that is context. And when we talk about context, we're talking about where you are, with who, who is surrounding you, in what context you are in. And so let's take the example of two traders. One trader that works for a trading floor with very tight risk limits. They don't encourage their traders to be risk taking, and they actually punish them. And so they always keep things in a capital preservation mode. They don't adventure themselves much. Now, obviously, this trader will be more of a risk averse trader, and he will have struggles taking steps to be more of a risk taking because he's in a context that doesn't favor that. And so the consequences of him doing that are a little bit severe, and so he will predict that and he will just stay clear of it. He will just stay in his or her comfort zone. Now, we have the trader that works for a firm with wider risk limits, and they really encourage their traders to be more risk taking and experiment and, having fun with their trading, trying out new things. Obviously, this trader in this context that favors risk taking will be more easy to take risks on certain scenarios. And because perhaps he's surrounding with a team that is they are risk taking and they were rewarded for that, you will be more encouraged to go ahead and taking the risks. Now, I encourage you to look at the personality aspect, your environment, and your context, and understanding more or less what are the conditions that make you more of a risk seeker or more of a risk averse trader. And then with this information, you can adapt. It all starts with self awareness. And from there, you can use your risk behavior and your environment and context, right? Because these are the two biggest forces in influencing risk tolerance. It's not the personality, all right? So you can grab on these two and manipulate your environment and your context to become more of the trader you want to become. Peaceful trading, Sarah. Welcome, traders, to another Thursday Traders Tip. and this episode will be about the 6 forms of patience in trading. And so we tend to generally think as patience as a general concept, but we are actually able to distinguish 6 types of patience, and they are all super needed to succeed in trading. The first type is patience for the process, to let the process unfold. Okay, the trader's journey. The second one is about patience for the setup to show up. Third one, patience for your entry trigger. Fourth one, patience to hold the trade till take profit. Fifth one, patience to endure drawdowns, losing streaks, and tough market periods. And finally, the sixth one, but not least important, is the patience to learn from your mistakes and to stop beating yourself up and to see yourself without judgment and being able to go through the tough periods without judging yourself, because that judgment impedes you of growth and of self-improvement. So if anything, it only difficults your journey. So let's break down each one of them. The first one, patience for the process. And this is perhaps the most difficult and the most important one. This is about being able to hold a big picture perspective, because probabilities don't come as natural to us humans. So traders really need to make an effort to balance the short-term daily executions that trigger fear and all those short-term emotions, balancing that with the big picture activities that make you remind about the long-term vision, the journaling, analyzing your trades on the weekend, so you can have a better sense of your strategy and about your performance, and you can fully reset to start the trading week at in zero level without any type of emotion accumulated. And so it's really important to understand your edge here and have a track record that allows you to trust the process. Because if you don't have confidence in your strategy, it gets really difficult. And this data for beginners might be backtesting data, but as you start to accumulate trades inside of your strategy, you are able to build this database that the more you analyze it and the more you build it up, more knowledge you have about the weaknesses and strengths of your strategy. Because there are no strategy only with strong points, we need to understand both weaknesses and strong points. And the confidence is not only about that, yeah, my strategy is profitable and my strategy has 80% win rate and this and that, is about understanding the weak points, and when they show up, when you go through them with your strategy, how you're going to react to it. So accepting both the worst case and the best case scenario when things go wrong and right, and understanding what you're going to do in both scenarios, it's really important to build your sense of confidence and trust your edge. And then you also need to trust about your abilities to be a trader and to perform well. As I can tell you, a winning trade is fantastic. You gain some sense of confidence, perhaps more superficial. But what really gives you that confidence is about having a different response to a problematic trigger, or being able to not being impulsive when you would be impulsive in certain conditions, or being able to endure drawdowns. So that type of confidence really tells you that, okay, I'm able to change my response, I'm able to be resilient. So when we think about confidence, it's not about confidence about what we're capable of and about what our strategies can do, but about what we're going to do and how we're going to survive under tough market conditions and tough mental conditions like doubt and disbelief. And that is really key to go through the process. The second type of patience is patience to wait for the setup to unfold. And this is more visible when we don't have setups for a long time in the market, and then the perception starts to get distorted, and you start to see things when they don't exist. You start to see confluences aligning, you start to see opportunities when you just should be sitting on the sidelines. And so this is really challenging, especially when the market doesn't offer us setups for a long time. So that's why it's important to have a defined framework, not only to understand when you're going to trade, your strategy defines when you should be in the market, but also a plan to when not to trade. What are the conditions that are not favorable to our edge? And by understanding these, you will endure much better the the slow market conditions and the times that simply there's no opportunities because you have a plan to react to it. The third type of patience is patience to wait for the entry trigger. And this is tough. And the best advice I can give you here is to have a very well defined entry method. And beginners, they tend to confuse the trading idea or the setup with the entry method. And sometimes by confusing both, they don't have an exact sense or certainty about where they want to enter and when and what needs to happen. So it's really important to have a defined entry method. The setup is about the higher time frames, the conditions, the confluences you want to see, the idea research for the trading idea. But when it comes to the entry method, that's what tells you exactly when it's the right time to enter the market. So have that well defined. So in the midst of the uncertainty, at least you have some certainty. You know what conditions are favorable to enter, and then enter at the right time without hesitation. What happens here is that some traders are so eager to have that action and they see the setup aligning, everything is in the right place, that they end up being impulsive and take a preempted entry because they don't want to miss that trade. So this really messes up with your risk to reward. It messes up then with your strategy. From a good trading idea, you just had a poor entry, which can compromise the whole trade because you know you started on a bad note. You have conscious of that, and you bring that guilt to riding the trade, and then the exit ends up being a poor exit, or you just end up self-sabotaging yourself. The fourth type of patience is the patience to hold your trade till take profit. And this is such a struggle, but it comes from the understanding that a great entry, a perfect entry to the week, doesn't matter if you have a poor exit. And it's about giving emphasis to the risk to reward rather than just the risk. And so it's really, really important to have a take profit method that you trust. Because if you just set it your take profit method because it looks good and because 2R is what your strategy needs in terms of win rate to be profitable, that doesn't hold much weight. You really need to understand if that's a viable option. So if you have a 2R take profit, but then in most of your trades, in 80% of your trades, price only gets you a one-to-one risk to reward, then it's a sign you need to adjust. And so don't set your take profit method in the dark. Go to your database. That's why it's so important to have one and to journal your trades, at least the bare minimum, your screenshots with the entry, stop loss, and take profit, to then understand, okay, what does price tends to do after my entry? And you can make this study to measure the entry point till the maximum peak that the price does, and then understand what is the most viable option to take profits. Some traders set a 2R profit based on risk to reward. Other traders set based on a certain type of conditions that need to be present. Whatever it is, it's also very important to be well defined so that you don't let the fear, the uncertainty kick in, which is already enough the uncertainty that you have from the market. So set a defined one, and then it doesn't matter if there's a retracement, you will not be so enticed in closing the trade too early. You will let the trade run no matter what because you trust your take profit. So it's all based on these big picture activities. The fifth type of patience is patience to endure drawdowns, losing streaks, and tough market conditions. And if you already found some sort of consistent profitability, you know that it's easier to perform your strategy when things are going well. But then when you start to see that your strategy is no longer performing as it should or as it would, and things are changing, perhaps your performance is changing as well because of the fear, you start to get into a drawdown. And then you know that the best thing to do is to take a step back and, whatever you need to reset a little bit and take that time to visit the strong points, visit your best trades. I'd say isolate the trades that you have of your database that were extremely well performed and preferably winners, and understand what made that trade so successful in your performance and in the technical conditions market wise, so that you have a boost in confidence to then come back stronger to get out from that drawdown. Because drawdowns are really opportunities. You know, pro athletes and all pro performers, they don't go from good to great with normal conditions. They need to experience adverse conditions in order to build up their skill set even more and then survive. And after that drawdown, if you're able to survive, that's only a proof of your skill set, of your resilience. And what happens usually is that after you go through that, you are able to reach new highs of performance, new highs in your equity curve. And then you know that the next drawdown, it's just another speed bump. The first one, the first set of losing streaks that you experience is always the most difficult one, but you need to have the confidence that they are just opportunities and obstacles that are there for you to show what you got, to show your best performance. And finally, the last type of patience, but not least, is patience to learn from your mistakes and to go through the process. Traders tend to beat themselves up for their mistakes. And so this is really something that impedes you from learning and from seeing things as they are. The moment you attach a meaning of guilt, shame, blame to your thoughts and to your results and everything that's happening is the moment that you lose the opportunity to analyze things objectively and learn from your mistakes. Because it's really impossible to learn from something when you feel that sense of guilt and shame. So in order to learn, you need to remove that first, that clutter, and then you are able to grow much faster. It's not easy for some traders because these mistakes, these losses trigger past experiences and we call past memories of failure and guilt. And so that brings it back all to trading, but we need to learn to see things as they are, to see price as it is, to see our mind material as it is. And that's taught by meditation and by detaching from your mind narrative and not identifying yourself with it. So it's a process, and mindfulness is very present. Patience in trading is something that comes as a natural consequence of confidence. So if you're struggling with patience, likely you struggle from confidence in your strategy or in you to perform well. If you fully trust your strategy, if you have the statistics, if you have a big sample of trades that tell you your strategy offers you an edge 100%, then the lack of patience might be more in yourself, in your lack of confidence about your abilities, about you reaching your full potential. It might be that you have a limiting belief that is limiting your potential and your reality. Now, if you don't trust fully your edge, your technical strategy, then you need to address this first before you start working on the psychology side. It's really, really important to aim to gather as much trades as you can to really understand your edge and how many losses do I normally experience in a row and how many wins, win rate, average risk to reward, average holding period of trades. This is something that gonna give you an extreme amount of confidence. And so this type of confidence, when you have it in place, it's so much more easy to be patient. True confidence allows you to trade detachedly. Peaceful trading, Sarah.